Hello, welcome to Business Morning right here on Channels Television. It's another trading day right here in Lagos, Nigeria, and it's time to maybe have some fun in the markets at this point. That's if you're playing, you know, the local boss. You know, it's bullish, 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 bullish. I did mention that it was getting boring because we've not seen the bear at all, but who knows? Maybe the bear might appear at some point. But let's get a check on what's playing out to the oil market now. We've seen oil prices. They took a breather in Asian trade today after a previous session spike of more than 3%. As investors, they await developments from U.S. President Donald Trump's tighter deadline, that's for Russia to end the war in Ukraine. And we're seeing, earlier in the week, that's just Monday, I did say Brent was finding it hard to get back above that $70 per barrel level, but it's crushed that now, and it's $2 up. $2.60, 0.12%, and WTI now trying to cross over that $70 level at this point. So we're seeing a bullish sentiment right there in the oil market. We see the Brent crude September contract expiring. That's today. That was up about 5 cents to $72.56 a barrel. So investors are watching out for what's playing out right there in the oil space to see if they go long or short at this point. So other matters now, economic matters. We see the IMF has retained Nigeria's 2025 GDP growth forecast at 3.4%, unchanged despite the country's recent GDP rebasing by the National Bureau of Statistics. The NBS said Nigeria's GDP expanded to 372 trillion naira. That's about $243 billion in 2024, as more informal sectors were captured. However, Nigeria remains Africa's fourth largest economy. Global growth is now projected at 3.0% for 2025, slightly higher than April's forecast due to improved financial conditions and policy moves in major economies. All right, to other matters now. The Federal Inland Revenue Service has halted the issuance of tax exemption certificates across all taxpayer categories, including pioneer status companies, NGOs, and entities in free trade zones. FIRS emphasized that existing certificates remain valid only until their expiry dates, after which no renewals will be granted. The notice further mandates that all future claims for tax benefits or exemptions must adhere strictly to applicable laws and FIRS-approved procedures. The agency also warned that forgery, alteration, or misrepresentation of exemption status will attract severe penalties under the law. All right, the Federal Competition and Consumer Protection Commission, now looking at consumer protection, they've launched a targeted market engagement forum in major Lagos trading hubs, including Mile 12, Alaba, and Tedrosho markets, aimed at safeguarding consumers and assisting legitimate small businesses. This initiative comes amid troubling revelations, such as the discovery of suspected expired and deceptively packaged rice at the Daliko market in Mushin, a practice deemed both illegal and dangerous. Take a listen.
In accordance with Section 17, subsection 1 of the FCCPA, as traders, you are an important stakeholder group whose services are indispensable to economic activity and deeply consequential to the welfare and well-being of consumers. As a matter of fact, consumer protection starts with you, the hard-working men and women who rise early, open your shops, power the economy, and ensure that consumers get value for their purchases. However, while many of you work tirelessly to satisfy consumers, others engage in all forms of market abuses that shortchange consumers. Only last week, FCCPC operatives were at the Lamco market in Mushin area of Lagos, where they uncovered suspected expired rice that was being rebagged and sold as premium brands. This kind of practice is wrong and is illegal. It puts lives at risk and damages the reputation of all traders.
All right, now to our first conversation. As Nigeria continues its quest for inclusive and sustainable economic growth, financial inclusion has emerged as a critical pillar, not just for expanding access to banking and credit, but as a driver of productivity, entrepreneurship, and poverty reduction. From digital wallets in remote villages to small business loans through fintech platforms, the financial inclusion landscape is reshaping the country's informal economy and contributing to its GDP, with recent GDP rebasing reflecting broader participation in the digital and informal sectors. It's clear that inclusion isn't just a social objective, it's a macroeconomic strategy. Well, joining us to unpack this, we have Mr. Olu who is the CEO of Phillips and Samuel Limited. He's a former president and co-CEO of OPay Nigeria. He's also an executive in residence at the Lagos Business School, and so much more that I cannot read out right now. So great to have you on the show today.
Thank you, Laddie. Good to come on your program.
Fantastic. I know I've been trying to get you on for the longest time now, and finally, in the second half of 2025, you're able to make time, because I know you have a very busy
it's a good day today.
schedule. Yeah. So, financial inclusion. I know you talk about that a lot at this point, and it seems data is showing us we're seeing some kind of improvement. At this point, if we look at Nigeria's active bank account data, that's from NIBS, and we're seeing 320 million active bank accounts. That's for the first half of 2025. Closed accounts is about 29.4 million. Dormant accounts, 33.39 million. And we see total cashless transactions. That has jumped really high, 295 trillion Naira. Have we reached the point we've been looking for when it comes to financial inclusion?
Thank you, Laddie. We've made a lot of progress. We have to congratulate ourselves as a country. Those data are very valid. We have also been helped significantly by cashless. I think as a country, we have taken a more introspective look at the challenges of cashless, both at macro and individual level. And we've seen a lot of more investment in digital services and uptake by a lot of our small business people. Today, pay by transfer, where even a suya seller or a market woman receives largely payment by, have a little typed paper with the account number. It's become a norm. And that's the underlying basis of the numbers you've seen. If you look at the rebased numbers we just published by the National Bureau of Statistics, even though financial services is now about 3% in the rebased contributions to GDP. But what's important to note, very interesting, which you need to highlight, is that financial services grew 15% in year on year from Q1 GDP numbers. And when you compare that to the average GDP growth, which is about 3 to 4%, so you see that financial services growing 3-4 times faster than the rest of the economy. And that is largely driven by financial inclusion services, expansion of services to a lot of underserved area. Even though as we go along, I will talk about there's still far much more to do.
Right.
Agent banking services, pay by transfer are the real evidence on the streets of the progress that we have made in in more inclusive financial services.
Right.
Even though there's still a lot to do. Nearly 40% of Nigerians are still excluded from financial services if we use the FINA access to finance society data in 2023. So there's still a lot to do. We all need to cooperate, bring our fintechs, our banks together. Also ensuring that for my fintech colleagues, we need to make sure that we are not just serving the previously banked but underserved, but ensuring that we're also serving the completely excluded, because there are two different things. If we look at what we are doing in fintech, even though we are making a lot of progress, far much more of what we are doing is about serving the previously banked but underserved, which are people getting a second, third account in a fintech after being banked already. If we look at how much we have taken service to people who did not have financial services at all, we still have far much more to do, especially in northern Nigeria and among women, where you have more than, in some states, for example, in the northwest, you have nearly 40%, you have nearly 60% financial exclusion. In Sokoto, Zamfara, Katsina, and other states in northwest Nigeria.
Right, and definitely we have a target at this point. This administration is aiming for a $1 trillion economy. You know, what you're seeing, you know, play out, you know, with financial inclusion right now with the progress, you know, that we've made. How much more progress do we need to get us to that level? And is it reliant on, you know, financial inclusion to actually hit that target?
The $1 trillion economy, it's a great ambition. And we've got the potentials for it as a country. Even though someone will say now that when we look at the rebased economy based on the current exchange rate, the hurdle that we need to jump is now much bigger than we all thought when we used to be like a $450 billion economy to $1 trillion. We're now just about $250 billion economy. Right. So we need to grow 4 times. Financial inclusion or digital financial services, or including people in the digital economy, has a key role to play. The fundamental role in economics that digital economy plays and financial inclusion plays is that it crashes economic transaction cost. So essentially, I mean, the way to see that if I want to trade, I do not have a financial account, or I'm not on a digital platform, I probably will need to travel from Lagos to Kano. I cannot consummate a transaction. The search and matching cost of transactions are expensive. What financial inclusion does, when I can be paid and I can send payments, irrespective of where I can trade much longer than the length of my arm. I always say that when you are an MSME and the only thing you can do is cash, is that you cannot trade much more than the length of your arm. So by what financial inclusion would do is to extend the reach and depth of our, not just financial markets, but the markets that financial inclusion serves in agriculture and trade. One of the interesting things about the new GDP rebased number is agriculture and trade is about half of the economy, even though there are interesting dimensions to it. Financial inclusion will help our smallholder farmers be more integrated into the formal economy so that they can become more productive. A lot of smallholder farmers, when they have financial accounts, they can be better aggregated. Rural extension service in agriculture will be much better. They can be better integrated into commercial agriculture at scale, at aggregator level.
Right.
Same thing with trade. We have 44 million MSMEs. Driving productivity, driving market reach, when they can be paid and they can pay. Today, very interesting, everybody today does one form of social commerce or the other. They are trading online. This was not possible before. So someone in Mowe, for example, can now be selling a clothes to someone in Aba, and with logistics services, those products are being delivered because they can get paid. Those are the kind of things, the size and the depth and the reach of the economy and inclusive prosperity that financial inclusion will drive on the journey to that $1 trillion economy will be something very fundamental. I must add, we must industrialize. Very, very, very important. Those are some of the things that are sticking out of the...
Right, we need to get the dollars in.
Dollars, yes. Must industrialize big time.
Let them go out that much.
And inclusion, finance will play, getting more people into that space will play a very key role.
All right, so, you know, with financial inclusion, we also have to talk about affordability. Yeah. You know, can the average Nigerian afford to own an account, you know, at this point? Because, you know, inflation, currency devaluation, that has taken a lot of people under the poverty line. And just, you know, at the end of every month, you know, you get all of those charges, you know, from the traditional banks. I got a SMS charge, about over 1,000 Naira SMS charge. We have the EMTL, you know, if you're trying to send maybe over 10,000 Naira, we charge you about 50 Naira for that. And a couple of other charges. You just see there's VAT, there's so many charges I've seen on my account. And I'm wondering, the average Nigerian, can they afford all these kind of charges?
Very interesting question you've asked, Daddy. Looking at, just supporting what you said with the EFINA access to finance research data in 2023, the biggest barrier to financial inclusion in Nigeria, 2 times access, last mile access issues, 2 times cost issues, is economic exclusion. things like I don't have a job, things like I don't have money to put in a financial account. It is 2x, 3x other factors in terms of barriers to exclusion, barriers to inclusion. And now, between 2023 and now, when that study was done, we've seen as we do economic reforms, the pace of economic reforms have been far more disproportionate on the low income and the poor. So what we may see if we do that study again is that those economic exclusion barriers might have become much more amplified in the short term. In fact, we need to do inclusion. We need to do economic reforms. We need to recognize that short-term pains. And therefore, one of the things we have to do about our financial inclusion journey is not just to do financial inclusion in silos. It has to be how we do it in complement with economic inclusion programs in agriculture, in retail trade, in vocational trade that employs a lot of people, so that we make them more productive in what they do. And a trader that can receive money can trade much more wider. A farmer that can receive money can trade more wider. That's one of the very important things we have to do. Tackle, integrate financial inclusion with economic inclusion programs. The other thing related to what you said is that we must look at cost issues. We need to look at affordable micropayments. In markets like India and Brazil, where we have seen financial inclusion explode significantly in an accelerated way, it's also because those countries tackle affordable micropayments. So if I want to send a small amount of money, 1,000, 2,000 naira, it should be, some of them should be much more affordable than someone who wants to send 25,000 naira. If we do that, we are going to get many more people doing digital payments, because by the time you pay, for example, USSD to the telco service, you pay the charges of the bank. Those are significant costs to the low-income people that we need to bring into the financial system. So those are some of the areas where we need to coordinate regulation, both on the telecom side, on the financial services side, so that we deliver affordable micropayments, so that transferring 500 naira feels like transferring 500 naira recharge card. We are going to see digital services and payments amplify and explode, as we have seen in India, because that's a major factor that what they call universal payment interface, Indian UPI, has delivered in India. Anyone can transfer. In fact, it delivers a lot of things free for a lot of people.
Right.
For the low income. Yes.
Right, because this is a period where even the middle class has been wiped out, you know, at this point. So everyone needs help.
It's a big issue.
Right now, with even to afford transactions. All right, so there used to be that, I don't know if it's still there, you know, some kind of trust deficit, you know, with, you know, low-income people and fintechs. I think I still get it, you know, these days, you know, say, you still keep money on, you know, some of those fintechs. What if they, you know, I'd rather use the traditional bank, so I still get that, you know, most of the time. Are you seeing any improvement, you know, when it comes to trust?
Trust is built over time. What we have seen is that after 3, 4, 5 years of many of those fintechs being in business, trust and confidence levels in the markets are increasing, even though a lot still needs to be done. We must also commend the central bank that is doing a lot in terms of driving trust, tackling fraud in the financial system. For all our financial system players, I mean, when a small trader loses 10,000 naira because of fraud, to us it may be a small amount of money, but that 10,000 naira maybe is 50% of a woman's working capital for the day. She will not use financial services again if the money got disappeared. So we have to do much more in tackling fraud. The financial service companies are doing that, driven by the central bank with a very huge sanctions that I'm aware. So what you see is that people put in their first 50,000 and it did not disappear. Then they put the next 100,000 and 200,000. So over time, you're going to see much more confidence, and it is growing. Today, all the Uber drivers, the guys who is delivering your logistics services or delivering your goods for Jumia,
they always have a fintech. They always have a
fintech because it's fast, it is agile, and they have confidence in it. So that's the way to go. And the next thing that you will see, if those fintech services can begin to layer next layer services that the banks have not delivered, like lending, access to credit to the previously excluded, you're going to find increased confidence in terms of using fintech services.
Fantastic. All right, thank you so much. It was great having this conversation with you. That was Mr. Olu Komo, is the CEO of Phillips and Samuel Limited. Thank you for helping us unpack financial inclusion today. Thank you so much.
Thank you. Good to be on your program.
Thank you. And in recent years, Africa has seen a fintech gold rush, particularly in payments, from mobile wallets and merchant APIs to BNPL services, that's buy now, pay later. A swarm of startups have emerged across Nigeria, Kenya, Ghana, Senegal, and beyond, often backed by hundreds of millions in venture capital. While high-profile players like Flutterwave, Paystack, OPayWave, and Chipper Cash have helped digitize transactions and drive inclusion, many argue that this wave of payment-focused companies, they've reached a saturation at this point. Well, joining us to help explain this, we have Mr. Ike Eze. He's a managing partner at Beta Ventures, joining me right here in the studio. It's great to have you, sir.
Thank you.
Yeah.
Good to be here.
So I did pull out some data earlier, and I will see the number of fintechs in Nigeria and Africa. We see early 2021, that's for Nigeria, had 144. Early 2021, mid-2022, about 200 to 270 fintechs. 2023, 700 plus. Early 2024, 350 were active. And fintechs in Nigeria and Africa, we see as of January 2024, had reached over 1,263 active fintech companies. That's for Africa at this point. And personally, I was trying to make payments somewhere, and I noticed they brought out a POS of a company I've not even seen before. I didn't even know the name, at this point. So there's a huge number, of fintechs. How are you seeing this growth?
Well, I think that if you look at sort of the sector, fintech is going to keep growing because it's required. But specifically on the payment side, and this is where I think the challenge might be, is that payments is a very crowded space. And you find that payments also is a very undifferentiated space. So company A looks like company B, but they're trying to do what company C has already scaled on. So the sector is very full of a lot of players that are trying to do the same type of thing. However, fintech overall, we remain very bullish on fintech. We think that embedded systems continue to be interesting, insurance, but moving away from payments alone is where we think companies need to start looking at.
So I guess the fintech or the financial inclusion problem is solved.
No, that's actually a bigger issue as well. So if you look at a lot of startups that are playing in our space, a lot of them are doing payments, transactions, but everything is always to the banked customer. So everyone believes that since we had agent networks and we had OPay, we had PalmPay, we had MoneyPoint, that we've solved these issues. But if you peel back the surface, you'll find that to do it, you need a bank card, which means you're banked. To do it, you need a bank account, which means you're banked. To do it, you need a smartphone, which excludes. So we still think that there's a great opportunity to the unbanked sector. We do have an investment in a company called Ajo Card that's tackling that market, but we still think that that market remains unsolved.
That's Ajo?
Ajo Card.
Ajo Card. That's
yes.
the regular Ajo where you all...
Yes.
If somebody gets money at the end of the month...
But it's taking the systems that people are accustomed to,
right,
and just laying like a digital veneer on it and making it as simple as possible so 100% of the population can participate.
Right. So do you think we have too many fintech startups?
The great thing about capitalistic markets is that the market always determines, and you will find that there are 1,000 plus, and if you fast forward 36 months and we're down to 500 or so, then the market has decided that these companies are not required. We think that there's an overabundance of payments companies, and the thing we look at is differentiation. If you are not solving a gap and you're not doing it better than the next person, then we don't think that you will be around very long.
Right, so let's imagine I'm trying to pitch. At this point, I have this fantastic business idea, and it's payments again,
yes,
it's fintech, and I'm telling you, I'm trying to bank the unbanked. Right now, I need so amount of money. I'm trying to raise capital at this point. What are you saying to me?
I'm listening. Because I think it's to listen to what the entrepreneur is actually building. Because it's from that you'll determine if it's differentiated. Because you might find that somebody has a secret, and this is what we look for. Is there something you know that is not common knowledge? And you usually find secrets and gaps from being inside the belly of the beast. So you know that people in this market, there's a very definite gap. OPE is not targeting it. First Bank is not targeting it. All the other new entrants are not targeting it. When we size the market, there might be 10 million people that have this problem. And you're targeting that market because there's a secret you know that you're sharing with us and we're funding. So we look for differentiation in some of the things that entrepreneurs are doing. And if there is no differentiation, it makes it very hard to decide to invest.
Right, so you're not getting my money, at this point.
Well, not from me. You're getting money from someone else, but not from us, yes.
And I did check out data from the big deal. First half of 2025,
yeah.
Big raises, so far in Africa. And I also saw a follow-up saying that fintech is also getting most of the attention. That's in the first half of 2025.
Yes.
Is this going to be sustained? In your view, and what are VCs, what other sectors are VCs looking at?
So fintech right now, I think first half of 2025, 45% of the capital that came into Africa went to fintechs. You find that energy is coming up. So this might take the guise of clean tech. So you find that solar systems, battery technology, wind, so these are substitutes, as well as other energy systems. So the challenge for VCs versus opportunities is trying to match how long our money can go into a company. So there are some great things that need to be built, infrastructure that need to be built, but to recoup that investment might be a 15, 20-year cycle. We as investors in venture capital pools, we have a cap of about 10 years. So typically 2 to 3, maybe as high as 5 years investment, and then a 5 to 7
Would you call it patient capital? Not really patient?
It is midterm capital.
Right.
Patient capital are people that can sit for 15, 20 years.
Right.
Pension funds are patient capital.
Right.
And we think that inclusion of pension funds into the venture capital pool will also allow venture capital to be a little bit more patient because we can hand off this investment into a public market that pension companies can now come into.
Right, and are there any sectors you're seeing at this point that you think other VCs are not really looking at?
I think we all look at similar things. It's just, do you have the capability to dissect the opportunity and then add value to the company? So from a thesis standpoint, we look at broadly 4 things. One is the movement of value and goods. So that typically is logistics and fintech. Then we look at the well-being of Africans, and that's health tech, it's med tech, and then it's ed tech. So if you look at need in Nigeria, 20 million children out of school. That is a massive amount. There's no timeline that allows us to build enough schools to educate the kids. So we think AI distributed systems are going to help us get there. The third thing we look at is energy. So these are more clean energy sources. And then the fourth thing is, of course, pure tech. So platforms and real tech that we think that is very capable of being built here as well.
Right, and talking about tech at this point, what trends are you seeing? There's so much talk about stable coins at this point, and definitely we did see the Genius Act in the US. That's also playing into the use of stable coins at this point. Do you think fintechs are looking in that direction?
Fintechs are solidly in that direction. So if you look at problems, and we go back to finding problems that need to be fixed. So if you look at, say, B2C payments in the Nigerian market, we think that has essentially been solved on the rails side. So everything else is just a slight addition on top. P2P is one of those other sectors that we think that there's movement, but how big is the market? Because I can send money to you now, you can send money to me. The friction isn't there. When you start looking at business transactions that are cross-border, imagine somebody that needs to buy parts from China, the ache that they go through to get money. Your bank tells you, I don't have the currency for you. You have to go find the currency, buy it, put it in your account before you do a transaction. So that's where we're seeing stable coins and people sort of looking at the block side of things, where you can on-ramp onto a stable coin and use USDC, USDT, or whatever other stable coin, and you can off-ramp in China. So cross-border, we think, is a massive market. It's a growing market as well, and we don't see those needs yet being solved. There are some exciting companies that are building that we're watching, and we think if they can figure out how to scale, excellent opportunities there.
Right, I'm talking about watching. I know you're a venture capitalist, I know you're an investor, and I know you talk to a lot of startups and founders looking for money, trying to raise capital at this point. I'm sure we have some of them watching right now. What would you say to one of those founders now that's trying to raise capital? What advice do you have for them?
I think the fundamental advice is look at the problems you're solving. Because I think if you can look at a problem being solved, you can showcase that I have built a solution, and as we say in our firm, the dogs are eating the dog food, which means that people are actually enjoying what it is that you've built. Now, the question after that is, how large is the market? I think there's some fantastic businesses that never need to raise capital from venture capitalists. They can raise local capital from angels, and it could be a fantastic business long term. So it's that scale. Can it be built into a significant company? Because that's how we get the returns that we need, is that significant companies are built.
Right, and the VCs must get their returns.
Have to.
Have to. Thank you so much. It was great having this conversation with you, Mr. Ike is a managing partner at Beta Ventures and a big venture capitalist. Thank you for joining me today.
Thank you for having me.
All right, let's get a check on other matters now. At this point, we see Nigerian banks have restarted Naira-denominated card payments for international school fees and medical bills, services that were previously suspended due to prolonged foreign exchange shortages. Let's look at this and other matters now in the fixed income market with Mr. Chuka Nwachukwu, who is a chief dealer, group head of trading at United Bank of Africa. Great to have you on the show. Good morning.
Good morning, laddie.
So yes, I did try my Naira card recently abroad to make payments, and it worked after years of not working, and that was quite a relief at this point. So did we get any benefits from the suspension in the first place, in your opinion?
Thank you very much. Well, the suspension wasn't something that the government or the banks planned. It was a result of the scarcity of foreign currency effects at that time. But with the introduction of,
All right, there we're having some network glitches there. And, definitely it was quite a shock, to many users. We'll try and get...
And then, of course, we've seen increase...
All right, Mr. Nwachukwu, sorry, I lost you for a moment there. It was frozen, but, you can finish your thoughts, at this point, because I'm trying to, find out, you did mention that it was because of, the scarce dollars. That's why the suspension, came in the first place. People couldn't use their, Naira cards for any kind of payment, that had to do with dollars. So you were explaining the benefits.
Yeah, so we couldn't, most banks, or virtually all the banks stopped it. But with increased liquidity in the system, it's something that the bank decided to take advantage of. And, for customers, the benefit is huge in the sense that, you no longer have to go to the, BDC markets to, to fund your activities that you couldn't fund through the interbank. So But then I will only sound a little bit of caution because this increased liquidity we've seen in the FS market, is majorly from the FPI inflows. And then, we all know that some of these FPI inflows are hot money, as we call them, and they can pull out at any time. And so, for me, I think the banks have to be cautious on the Naira, debit card FS transactions. But by and large, it's actually a good one for the country and then for customers.
Right, and I believe some people would see this as a good thing. At this point, able to pay for school fees abroad, pay for medical services abroad. But personally, I feel that's importing. At this point, we're sending out very important dollars that we need here when we can have those kind of services right here. In Nigeria, we can have good schools. We don't have to send our kids abroad. At this point. But is there any risk? Now that the suspension has been lifted, any risk that we're putting pressure on the Naira again?
Yeah, like I mentioned earlier, the only risk I can see is the fact that majorly the inflows we've seen in the market are majorly from the FPIs, and then I said earlier that the caution there is that the FPIs are mainly hot money. Some of them stay between 6 months to 1 year. And so what happens when they pull out? That's where we have, we might have a concern. However, also some of these transactions have limits, and then the different banks will actually, have limits for these transactions, and that also more like a check, so that people don't, the customers don't go withdrawing and then they're making transactions that are above, that banks are not able to, to fund. And so all this, is part of the check put in place to make sure that this reintroduction of this Naira cards, works efficiently, and then of course it doesn't put more pressure on our FX demand.
Right. So you mentioned there that the liquidity we're seeing right now, the source is mostly hot money. That's money that's coming in for a short time. I guess the opposite of that would be cold money. Any sources for cold money?
No, and not at all. I mean, it's just a term used, for short-term investment inflows into the country.
Yeah, because it'd be nice to see some patient dollars, coming into the country that's staying more than, just a couple of months or maybe a year. But let's pivot to the fixed income market now. See the average benchmark OMO yield, that dropped by about 28 basis points, about 25.49%. I've heard it's largely driven by strong buying for December 2025 instruments. What would you say are the key drivers behind this surge in demand for this December 2025 maturities?
So basically, OMO is mainly, for now, mainly used to attract the FPI, the hot money I mentioned earlier. And so we've seen the yield, move majorly higher than the NTB, NTB. And so, like, for example, the OMO result that came out, that was early this week, about yesterday, we saw it move, from 21 levels to 23 levels, and all in is around 25, 26 levels. One of the reasons, is also liquidity in the system. We've seen system liquidity in positive of 1.3 trillion presently, and that also has affected, trading in the fixed income market. So we've seen a lot of bullish sentiment because some of this liquidity that came in, investors and then banks actually reinvested it in fixed income securities, and OMO especially is very attractive. NTB is around 15 levels, and so if I have OMO at 23 levels, all in at 25, then it makes a whole lot of sense. Don't forget that inflation is around 22 levels, and so it only makes sense that CBN make OMO rate attractive to be able to attract investors due to considering the inflation level we have.
All right, let's look at the Treasury bills now. I think the NTB yields, the average one, that's slightly contracted by just, I think, 1 basis point to 16.75%. But this despite buying across all maturities. What do you think happened here?
So basically, we've seen a decrease in investors' interest in Treasury bills, and that's why you see a lot of activities on the OMO side. Specifically the negative yield, is what is affecting investors' interest. And so most investors are seeking for alternative investment, that especially with, what is happening in the equity market. And you've seen that, we've seen stock price, go as high as some around above 100 Naira. And so ordinarily, it makes more sense for investors, to shift attention to equity market. And that's why we've seen, a lot of investors' appetite declined on the fixed income market.
So you're really seeing that happen at this point. We've heard some analysts say the equities market is getting the attention, right now, because most of those fixed income investors are moving, into the equities market. You're seeing that play out, really?
Yes. So that's what we've seen play out. Fixed income market and equity market, operate opposite. So when fixed income market yield, is high, the investors obviously, move to the fixed income market. And that's why, for the past 7 months, for example, we've seen yield on the fixed income market go as high as 23-24% for NTB. And then, of course, Momo move as high as almost 28% all in. And so for now, we are seeing that, those activities or those attractive investment on the equity market. And that's why we've seen that most of the investors are moving to equity market where share prices of companies are very high. And so it's expected that this level, will continue to have, this a decrease in investment. Another issue again is the fact that, DMO, looking to borrow, but again, looking to borrow at more cheaper levels. And so the yields we're seeing at the yield level we're seeing now, is a result of DMO's activity, try as much as they can to borrow at the cheapest level. Don't forget that, our debt service is very high, well over 95% of our revenue goes into debt servicing. And so one of the mandates of DMO is to try to reduce the cost of borrowing for the government as much as they can.
Right, we definitely do draw down that cost of borrowing there from the government side. But thank you so much, Mr. Chukwuka Nwachukwu, who is the Chief Dealer, Group Head of Trading at UBA. Thank you for coming on today.
Thank you, Ladi. Have a great day.
Fantastic. You too. All right, let's head on to the global space now. Let's find out what's tickling the fancy right there for global investors. Good to have you, Ini. And yeah, I love your bling there. Looks very rich.
I'm very rich, actually. Thank you, Ladi. Well, good morning, everyone. It's Global News segment of Business Morning. We start from France, where the economic growth there picked up in the second quarter, despite uncertain international environment. The data was released by a government, and French economic growth unexpectedly accelerated in the second quarter as inventory building offset weak domestic demand and a drag from trade output. In the euro area's second largest, we know the largest is Germany, went up 0.3% in 3 months ending in June, beating economists' expectation for an expansion, marching 0.1% recorded in the first quarter. And that pace is the first for a month counting to June, and it's a sign of resilience, according to economists, for Europe facing steep trade tariffs on its export to the U.S. We now know they've settled at 15%, even though that's not satisfactory to a lot of countries on the bloc, but that's what they have signed with the United States at this time. And then we head to Australia, where the headline inflation rate there in the second quarter of the year slipped to its lowest point since March 2021, coming at 2.1% year-over-year compared to 2.4% in the preceding period. Well, this was lower than the 2.2% that was expected by economists and almost touching the lower band of the 2 to 3% target at the Reserve Bank of Australia. On a quarter-over-quarter basis, inflation slowed to 0.7% compared to 0.8% as expected before. Now, the Australian Bureau of Statistics reveals that the most significant price rises in the quarter were seen in housing, food, and non-alcoholic beverages, as well as health. Although there were fall in transport costs partially offset some of those rise. On July 24, RBA Governor Michelle Bullock said in a speech that she expected the headline inflation in June quarter to be in the lower half of the 2 to 3% target range, while explaining that it partially reflects the ongoing effect of temporary cost of living relief. Australia's GDP grew less than expected in the first quarter of 2025, expanding by 1.3% year-over-year and lower than the expected 1.5% growth. On a quarter-to-quarter basis, the economy expanded 0.2%, undershooting expectations of a 0.4% growth. Some corporate now. Europe's largest lender, HSBC, missed the second quarter profit expectation, mostly on account of impairment charges related to a Chinese bank and loss of income from businesses it disposed in the first half of last year. HSBC, which reported profit before tax for the 3 months ended June at $6.3 billion. That's down 29% from a year ago. They announced a share buyback of $3 billion. And HSBC's second quarter 2025 results compared with some other compiled by the bank shows that profit before tax was at 6.3 billion versus 6.99 billion. Revenue stood at 16.5 billion versus 16.67. Operating expenses went up by 10% compared to the same period a year ago and were largely owed to restructuring and other related costs, as well as from increased spending and investment in technology. The Hong Kong listed shares of HSBC also declined almost 3%. And yet another corporate is Toyota, very popular here in Nigeria. Well, Toyota Motor Corporation saw record global sales during the first half of 2025. A strong demand for hybrid vehicles in core markets helped offset headwinds from President Donald Trump's tariffs on cars imported to the United States. Toyota's global sales, including that of subsidiaries Daihatsu Motor and Hino Motors Limited, went up 7.4% to more than 5.5 million units between January and June, according to the company. And that's mostly due to strong demand in the U.S., in Japan, and China. Production also went up 8.8% to 5.5 million units during the period, including a nearly 20% jump in domestic output. And we can hardly have global news without stopping by in America. Tesla CEO Elon Musk says that the U.S. automaker had signed a $16.5 billion deal to source chips from Samsung Electronics, a move expected to bolster the South Korean tech giant's loss-making contract manufacturing business. Samsung's shares after that news jumped as much as 6.8%. That's the highest in September last year after that news. And Tesla shares also went up 1.9% in the U.S. pre-market trading. Musk says that Samsung's new chip factory in Taylor, Texas, will make Tesla's next generation A16 chip, potentially re-energizing the project that has faced long delays and Samsung's difficulties in retaining and attracting major clients. So there, the chip war between the U.S. and China is pushing companies to seek for refuge or hedge, you know, maybe individually or as a group from other countries. And I think Samsung has been really busy this last couple of days. This is like the second agreement that they're going into this week alone. The first one was on Monday, I believe. Now, let's come back home a bit, at least closer home. The just concluded second United Nations Tourism and ICO Ministerial Conference on Tourism and Air Transport in Africa was held in Angola, and there were some key outcomes. Amongst others, the adoption of the Luanda ministerial statement. Ministers endorsed a collective declaration outlining shared priorities and actionable comments or commitments to strengthen tourism and aviation synergies across Africa. So, talking about Africa joining the aviation and tourism, after all, one cannot do without the other. That was a major conversation there. Now, we have the United Nations Tourism Regional Director for Africa to outlining some of this agreement that we may see in the coming days in Africa.
This statement was circulated to both our ministers of tourism and transport ahead of us coming here. We've taken into account all comments and suggestions that member states contributed towards the statement. And my role and Madam Lucy's role this morning is just to highlight some key excerpts of this statement, of which then we will adopt it by acclamation. So I will just start by reading out the first part, whereby ministers responsible for tourism and air transport from UN Tourism and ICAO member states convened in Luanda acknowledges the vital role of air connectivity and tourism in fostering economic integration, regional development, and inclusive growth across Africa. They have also reaffirmed their commitment to the Santa Maria Declaration of 2019 and call for accelerated efforts to align tourism and air transport strategies, recover sustainably post-COVID-19, and address structural and climate vulnerabilities, particularly those faced by small island developing states. They also to harmonize aviation and tourism policies, strengthen institutions, build human capacity, and drive investment in sustainable infrastructure and digital transformation.
So that's Elsia Grandcourt. She is the United Nations Tourism Regional Director for Africa, talking about some of the agreements that the ministers in both aviation and transport have come to, and hopefully we'll see that coming to pass in the coming days to boost tourism on the continent. On that note, I want to ask Ladi. Right. Ladi, I hope your next vacation will be spent on the continent.
Oh, yes. I
know you love the Western world.
No.
But you have to patronize.
I like them, but I don't have to go there all the time.
Oh, okay. You go there some of the time.
Yeah, I'd rather stay here on the African continent.
All right.
It's more fun.
I hope that's true.
Thank you so much, Aini, for giving us the details there. But let me give you a quick brief there on what's playing out in the markets now. It's open 138,579 points. That's the current trade right now in the market. That's at 10:25 a.m. That's up by 0.48%. Active trades right now: FCMB, Sovereign Trust Insurance PLC, Nigerian Breweries, Cadbury Nigeria, and Guaranteed Trust Holdings. Those are the active trades right now in the market right there. Thanks for watching Business Morning today. I'm Ladi Williams. Hope you have a profitable day. From me and the team right here at Channels HQ, it's bye for now.